As we've just heard, 60 years ago, Europe, with the UK and Luxembourg in the lead, established the Eurobond Market, an initiative that has proven to be highly successful and which has shaped international debt markets ever since. However, in January, as you know, the UK has left the EU, with London being a leading international financial centre. Many questions remain, for instance, how Brexit will impact international capital markets activities and also the cooperation between the UK and Luxembourg in the field of finance, and what role will sustainability play in the country's financial roadmap going forward. And to discuss these topics, we have invited Luxembourg's Minister of Finance, Pierre Gramegna, and UK Ambassador to Luxembourg, John Marshall, for an exchange of perspectives. Minister Gramegna, Ambassador John Marshall, thank you for being here. Welcome to the Stock Exchange Day.
Pleasure to be there.
And my first question is to you, Ambassador Marshall. With its international focus, the UK has played a leading role in bringing European capital markets to where they are today. With your new freedom of action and regulation, will the UK move away, or will the UK continue to join forces with other European financial centres to secure the interests of Europe? Where are you heading to?
Well, if you allow me, first of all, a very quick thank you to the Luxembourg Stock Exchange for the invitation in what is my, effectively my last full working week, and it's here in Luxembourg after 5 years, and a pleasure to share the platform with Minister Pierre Gramegna. So, I mean, the UK, as you know, is well known for being a hub for high-quality capital markets, underpinned by strong and effective regulation. So now, as we leave the European Union, we want to build on that reputation, build on that foundation, but also ensure that our regulatory framework reflects the needs of UK markets. So last year, the Chancellor of the Exchequer, Rishi Sunak, asked Jonathan Hill, Lord Hill, to undertake a review of our listings regime to optimise the capital raising processes for large and small companies on the UK markets. Jonathan Hill, of course, as Pierre well knows, was the UK Commissioner with responsibility for financial services in the Juncker Commission at the time of the referendum. And he announced his recommendations on the 3rd of March on the UK's budget day, recommendations following the review, but also some wider recommendations regarding capital markets. And the Chancellor has welcomed these, and Treasury officials are now kind of looking closely at them, and the FCA is also looking closely at them and has said that it will consider the recommendations for changes to the listings regime and consult as necessary. And I think that things will move forward pretty quickly on this. At the same time, we also announced recently that we will look at wider capital market reforms, and I think the intention is to bring forward policy proposals on those in the summer. As for the relationship with the UK in the area of financial services, I think we have to wait and see. I mean, at the moment we are negotiating a MOU on regulatory cooperation under the protocol attached to the Trade and Cooperation Agreement. That should be finalised by the end of March. As far as I understand, we're on track to do that. And, generally, we hope that the EU, when it comes to financial services, will be externally focused, not inwardly, and that the decisions that the Commission takes will be decisions in the interests of European businesses.
Okay, so right now it's a bit wait and see. You just spoke about the reputation of the financial centre. UK experts have played a leading role in shaping European regulations and the European capital markets roadmap. Minister Gramegna, with the UK and its international financial centre now being outside of the single market, what actions can Luxembourg take to ensure that Luxembourg continues to play an international role in capital markets?
Well, first of all, I would also like to thank the Luxembourg Stock Exchange and the Luxembourg Green Exchange for having us here together. My good friend John Marshall, the ambassador of the United Kingdom here in Luxembourg, with whom I have worked very closely in the last 5 years, especially because of the Brexit. Now, we used to work a lot before. We had to work even more after. And I can say that I miss Lord Hill, with whom I had an excellent personal relationship and working relationship. But nostalgia doesn't help us here, and we have obviously accepted the decision of the United Kingdom to leave, and we have to make the best out of it. Now, there's things that we can do at a national level, and there's things that need to be done at European level. Now, at the Luxembourg level, I would say we are natural partners with the City of London. That's well known, and it will continue to be like that. In fact, we are a kind of perfect one-stop shop for issuers and investors for capital markets. Now, we all know that London is the largest and most diverse financial center in the world today. I hope that it stays that way, because we will do everything we can to keep a strong relationship with London, and are ready on the Luxembourg side to do whatever it takes to achieve that. We have adjusted our law, for example. Our law, the Luxembourg law, is being used more and more now in international transactions, because the EU Commission and lots of players want to use an EU legislation instead of the British one that was used, because ours is very business friendly, as is the British one. And that gives us a good framework to work together. The other thing that is key, obviously, is that we have the green transition and the digital transition, well, which is transforming the world in which we live, and it's also transforming finance. Now, we're going to talk about the Luxembourg Green Exchange's success that was launched 5 years ago, which shows that Luxembourg was spearheading this evolution. In fact, it was created in the year where the Paris Convention was agreed, but also fintech is playing a key role. It's not only to enable us to do the digital transition, but fintech in itself is an extraordinary innovation, and we've seen that with our fintech lab, which is the Luxembourg House of Financial Technology, which has attracted hundreds of companies that are now doing innovation there, and are new actors which will help build bridges with the United Kingdom. And I take just the word tokenization, for example, to illustrate how different the financial world is becoming compared to what it was.
So you say nostalgia doesn't help, but a good cooperation for you is important. Ambassador Marshall, when it comes now to financial regulation, will the UK diverge from EU rules? Companies have spent considerable budgets to ensure compliance with European regulations. Was this money spent in vain?
So for the most part, of course, we support the objectives of EU legislation, which we have played a major part in helping to formulate, and which we have also exposed into UK law, with the laws in the UK and the EU being identical on the 1st of January. But the Chancellor has also made clear that now is an appropriate time for us to look to see whether our regulatory framework can be amended in the interests of the specificities of the UK. Because, I mean, legislation that was designed for 28 member states may not always be perfect for us. But he's also been really clear that he is absolutely committed, we as a government are absolutely committed to maintaining high regulatory standards. So there's not going to be any sort of significant, overwhelming sort of overhaul of the current regime. Rather, it's more about enhancing the effectiveness of UK regulation. We remain open and committed to continuing a dialogue on these issues with the European Union, as I say, and look forward to hearing what their intentions are on issues of equivalence. Now, as you say, UK companies across the EU too have spent a lot of money, incurred significant costs in complying with the changes that have been introduced since the financial crisis. And these changes were absolutely critical in strengthening the safety and stability of our financial market. So money well spent. And because it's so critical to the safety and security of financial markets, and that's another reason why we have no intention of, doing a sort of total overhaul of the system, but rather just looking at how we can make changes which would be helpful to the UK. And, divergence is an issue which lots of people get very excited about. I mean, divergence is inevitable. I've already indicated some areas in which we will be seeking to modestly diverge in the short term. Clearly, the EU is also going to be coming up with legislation of its own that we may choose not to follow. But divergence in itself is not a problem and doesn't need to mean unfair competition. And I find actually in the conversations that I have in Luxembourg with different people in the financial sector that they're quite relaxed about it. And it's not the sort of, big scary beast that some people like to portray it as.
Because I think everybody's looking for a win-win, and I think financial players are happy to hear that their money wasn't spent in vain. Minister Gramegna, how do you see the Eurobond market evolve after the loss of such an important partner as the UK? And how can Europe sustain its leadership in international debt markets post-Brexit?
I like your questions, but I'm going to challenge you because we haven't lost the United Kingdom as a partner for business.
They're happy to hear that.
And we will do our utmost not to lose it, and I'm pretty confident. Now, I would like to underline two things first. First is that capital markets is probably the area in the world where global markets are key. How do you want to use capital markets if they're not globalized? So that pushes you to have common rules and common regulations. The second thing is we shouldn't use Brexit to punish the United Kingdom. Or can put it differently, we shouldn't use the pretext of Brexit to try to build a fortress Europe. If you start with those two premises, with those two principles, you understand that there's a lot of common ground between what all financial centers around the world have, especially the bigger ones. We have a lot of common grounds with New York, with Singapore, with London, with Frankfurt and Luxembourg. There's more common ground than diversity because money flows very easily. So let's not over-dramatize the differences. Now, this being said, the United Kingdom has made a good point, which I fully share, which the government has said and the ambassador has implied. For the time being, if you look at the regulation of the United Kingdom, it's exactly the same as the one that we have. So this is a very peculiar situation. So that's why the dialogue that we need to build together needs to be of a different nature. So when we talk about equivalence, that's the magic word. Are the regulations in the United Kingdom equivalent to those of the European Union as we speak? The answer is yes to 100%. Tomorrow, the the United Kingdom will drift away a little bit, eventually. I'm not even sure they're going to drift away that much. I'd love to read the report that Lord Hill has made, and I'm very keen to look at it, because the only thing that really makes sense is that there is a kind of smarter regulation and an upgrade in regulation. I cannot imagine that the United Kingdom has as a goal to downgrade the level of regulation in a world where we need better, smarter regulation in many areas. So I'm pretty confident. So we need a structured dialogue with the United Kingdom, a regular one, an honest one, and in my opinion, an unpolitical one. This is not about politics. This is about the world markets that cover the whole world. We want to have investment, especially now in the recovery phase in the wake of the pandemic. So what we want is mobilize capital markets to organize a better world where we build back better, where we have sufficient investment to grow. So I see a lot of scope to work together. And the European Union is very often, has been, thanks partly also to the presence of the United Kingdom, but will remain a spearheader in some areas. I think of taxonomy, for example. It is the EU that has established the new standards for what is green. Now, I'm sure that the United Kingdom is going to build on that. Will they have exactly the same regulation? I don't know, but I would doubt that their goal is to undermine what has been already agreed together, because UK was in the boat when we did it. And so I think that's a very good example of how we can make progress together. And I had very many contacts with the Bank of England in the past years, and know that the governor there and the whole team is one of the most advanced on this key issue of sustainable finance and green bonds and sustainable initiatives. And we know that the next conference of parties for climate change is going to be in Glasgow, so in your country.
So you touched upon green investments, and sustainability has moved center stage. The UK and the EU have committed to reach net zero emission by 2050. And in November, the UK will host COP26, and expectations are, of course, very high. A big question is, how does all this reflect on capital markets? Ambassador Marshall, what concrete steps will the UK take to contribute to creating more sustainable capital markets? What is the UK's plan in terms of sovereign sustainable debt issuance?
So, I mean, we take our presidency of COP26 extremely seriously indeed. And this will be the single biggest international priority of my government this year. And the main focus, as you indicated, is in kind of raising ambition so that we can deliver on the goals of the Paris Agreement. And key to this is getting major emitters to commit to net zero by 2050, but also to commit to ambitious sort of midterm targets by 2030. So the UK, for example, has committed to reduce emissions by 68% in comparison with 1990 levels by 2030. Another really important component of our work as incoming presidency is to mobilize the 100 billion US dollars that the developed world has committed to the developing world to support them in their efforts of adaptation and resilience, and in beginning the conversation about what the new target will be. And both Luxembourg and the UK here take a very sort of progressive and ambitious approach. We have both committed to double the amount of money that we give to international climate finance, which in the case of the UK is 11.6 billion pounds between 2021 and 2025. So alongside these efforts, we've been running various campaigns, including a campaign on finance, whose objectives include seeking to improve the quantity and the quality and the comparability of climate-related disclosures through a framework based on based on the TCFD. Another objective is to improve the ability of the financial sector to measure and to manage climate risk, including through stress testing. And also to help investors spot the opportunities in the transition to net zero. And amongst the things that the UK specifically is doing, the Chancellor announced towards the end of last year that in 2021 we would be issuing our first ever sovereign green bond, and that this will be the first of several issuances. And the Debt Management Agency in the UK has also announced that they will be issuing at least 15 billion pound sterling of green bonds this calendar year, and that we will be producing our green gilt framework by the summer. And there are various other things we're also doing in the area, as the Minister said, of green taxonomy, and also ensuring that TCFD affiliated disclosures are made mandatory throughout the UK economy in larger companies by 2025. So there's a lot happening in this space. And the Chancellor is really keen when he sets out his vision for the City of London, also always to put sustainable green finance at the heart of that vision.
So you say the UK is very ambitious, and we hear this. Minister Gramegna, Luxembourg is the home to Europe's biggest fund center, with total assets under management reaching 5 trillion euros. What can the Luxembourg's financial center do more to ensure that a bigger part of this capital is channeled into sustainable investments? And more broadly, what does Luxembourg need to do in order to become a leading sustainable finance center in Europe?
Well, I think I would start by saying that we have already done a lot. So it's not only an ambition that we have, it is a task that we have given ourselves already 5-6 years ago. As it's Stock Exchange Day, I would like to say that it probably coincides with the initiative of the Luxembourg Green Exchange 2015. That was really the kind of wake-up event where I realized that as a government, as a country, as a financial center, as a whole, we need to act. Now, if we do a snapshot of the assets under management worldwide that are ESG, that are sustainable, 20% of these or those are already based in Luxembourg or domiciled in Luxembourg. So we are a key player in this area, which is good. We have to continue into that direction. The green bonds are key, but they still are at a very low level. In fact, green bonds account for only 2% of the bonds issued worldwide. So the potential of this field is enormous, and we want to build on that with the Luxembourg Green Exchange, but also in really giving ourselves the right framework. Now, I'm going to talk afterwards about Europe. Let me maybe say something that would be good news for Ambassador John Marshall and his country, because he said that the United Kingdom is working on giving itself a framework for green bonds. Well, we did that last year for Luxembourg, and it is the most modern one in the world, and it already entails all the EU taxonomy, the International Capital Markets Association principles, and it also has the United Nations goals embedded in it. So we issued a 1.5 billion euro bond last year, had a tremendous oversubscription and negative rate, and it showed that markets are expecting and calling for such financial products. And let's be clear about this. What we want to avoid is greenwashing. That's why we need these standards. And the European Union is really ahead of the pack. And as I said before, the United Kingdom has contributed to the elaboration of these rules. So we're not starting here from scratch. And here, like in this area, like in many others, we should build bridges with the Central Bank of the United Kingdom, with the City of London, so that in the end, we have a set of rules that becomes a world standard. In the same way as we've achieved to make sure that the fund industry regulations, be it alternative investment funds or more traditional UCITS, well, it's the EU regulation that is the benchmark a little bit. So we hope that with the European initiatives, with the Luxembourg initiatives, we can serve as a benchmark, but not a benchmark we alone against the rest of the world. We together with all the other partners. And let's not forget that there's another risk. I just mentioned the risk of greenwashing on the one hand. We don't want to build a green bubble on the one hand. And on the other hand, we must avoid the risk of stranded assets. Stranded assets meaning that assets that are not so clean, not so green, can be transformed over time. So that's why we have here a transition phase, and we have to work all together on this transition phase on the capital markets so that we have a smooth transition. And smooth transition doesn't mean that we shouldn't have ambitious goals, which we have in the European Union, as we have committed to, minus 55% by 2030, and then the decarbonation goal for 2050. But let's make sure we do it smartly.
Doing it smartly, no greenwashing, building bridges. I think this is a great way to end this exchange. Thank you very much, Minister Gramegna.
Thank you.
Thank you, Ambassador Marshall, for being with us and for having shared your perspectives with us.